All right, ladies and gentlemen, I hope you had a wonderful day. It was a slow day in the markets, just as we expected. There was no data. It was literally just 7 hours of war rumors all day, and we don't have much to look forward to this week besides some of the earnings. So, in the process of answering one of the Chad questions, it opened up a pretty interesting topic. So, I'm going to give you a quick recap. We're going to go over the plays of the day, but I'm going to show you something really cool, and we're going to talk about the dark side of trading. I got something big to show you. So, Chad, I have the plays, I have the keys, all the good stuff. Hopefully, you are ready for this week, and by being ready, I mean you don't get too crazy, considering last week was the big event. This week is going to be the burn one, and then next week is going to be NVIDIA and CPI and all of that. So, I have all of that. I hope you're ready for it. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. Run it, baby.
Always been a boss, I don't never need a break. Always been on style, you can put me with the greats. Big man, milk can, we can talk about the race. Zotan to my rag, got it all in one place, all in one tape. I don't want debate. Shout out to my nephew, man, he got my whole estate.
But right off the bat, we're going to talk about the dark side of trading towards the end. So somebody could tag that one in the comments. But as far as the keys, yeah, we had a big day today. It was a pretty big gap up, but if you see it intraday, we did not do that much. There were a couple of earnings in the morning. You still have Japan and a couple of other places closed. They had their own little holidays, but for the most part, it was a calm day. The only thing that you had back and forth is Israel going to attack Rafah? Did they have a deal with Hamas? Hamas agreed. They didn't agree. Then Israel agreed. Then they didn't. Then the market closed. Then they said Israel went into Rafah. It was literally 7 hours of that, and it was moving around the bonds and all of it. But a lot of people were calling it either low volume or boring, and I think it was pretty easy to spot how slow today really was. The volume was low. We were moving on a lot of stuff, but we were just carrying out what we were going through the last couple of days and getting relief after the earnings, Powell, and that data. Friday was good data, and the market really liked it. So I'm not expecting much this week. I think we should move very slow. The bond auctions in a couple of days, they may be able to wake us up pretty much after Wednesday. You're going to be getting 10-year and 30-year bond auctions. Otherwise, it really feels like the market, despite everything that's gone on, it has just fallen back into earnings mode. And if you guys have forgotten already, this is how it looks like. You get your gap ups and gap downs, and then the market stays pinned. Some names start to pull ahead or sell off ahead of the events, and then you cycle that through. The big difference as of right now is that I think 80% of stocks have now exited that buyback blackout period. So we're not expecting much this week. Tomorrow, I think you're going to get a 3-year bond auction. Maybe we get some Fed speakers, and that's what we got to talk about. Other than that, it should be very slow. The school of fish, all of those earnings, you will get individual moves, but if the market wants to make a big decisive move, I think we're going to need some big decisive data. So that is key number one. Coming into key number two, I highlighted this today on stream, and I really want people to see it because it is so subtle. Why are we up? Why is the market doing good? Just go look at the bonds. I know I sound like a broken record and I'm always showing you guys this, but it is so sly and subtle how the market, we go towards that 4-5, people chill out. Go look at where the market was around like April 9th and 11th. It was actually holding up, and then just slowly after it went above 4-5, the market started freaking out, and sure enough, you're getting this rally. You're knocking on the door of 5,200 on the SPX again. Sure enough, you got a pretty big decline, and now you are back below that 4.5. So this has been a big deal, and I just think even though there's a lot of headlines and we're staying like fixated to these soft landing, no landing stories, the bonds and what they're communicating and how the market's matching up, even though there's all these weird divergences, that 4.5, that 4.75, and the worries about 5, it all remains. And I would argue it is kind of driving the market, or at the very least, when it's all said and done, markets higher, markets lower, we look at the bonds, it is correlating. But I think a lot of people are like, wait, why are we going up? And it feels like not much has changed, but that fixed income market in bonds, that has really cooled out over this last week or so. So that is key number 2. And then finally, even though it is going to be slow this week, maybe these war headlines come back depending on if things get worse or not, because it's been like 3-4 weeks now of oil dropping, and we like brushed off those headlines just after freaking out when Israel and Iran started attacking each other. So maybe we get these headlines back. We are more concerned with Israel and Iran rather than the Rafah thing, but at the end of the day, you're getting these headlines. We saw some reactions on commodities. Maybe towards the end of the week we see something. Otherwise, if it's not going to be war headlines and we're not expecting any crazy data this week, there's going to be a few Fed speakers. They added some new info today but did not move much, and the only other factor is going to be those China stocks and whether or not they could string together that 3 weeks of rally and have things look good. Other than that, I don't think there's any other broad factors that could move us, and I think we're slowly just going to ride our way into next week, and then once we get the CPI, we could start to make some moves. So, Chad, I hope you're locked in for all of it, but now let us get into the plays. So, right off the bat, I got a couple of different plays. I even made a few plays today that are different than the ones that I have here, so I'll go over theirs. But the first play is Apple, and they have an event tomorrow. Apparently, they're releasing some sort of iPad, and that is usually a sell the news event, and I want to watch out for that. But the other thing, they just had earnings. They had that China sandbag. They rocketed up. And then over the weekend, Apple traded lower today because we found out that Buffett thinks that Apple is better than Coca-Cola and American Express, but he trimmed his stake, and that got the stock trading a little lower. So I want to see how this event plays out. The stock was underperforming, and then it just had earnings, and now you're getting this Buffett news. Feels like there's just a lot of catalysts being thrown on it, so we'll see what tomorrow does. But in a day that's going to be very quiet, I'm sure this Apple event is going to stick out. So watch out for that. That is play number 1. Then play number 2, I got to put this one back up here, but gold, and it's just an idea because I missed this today, and watch out for gold on any of the war headlines. If we do start to see that, or even if they start to disappear a little bit, I'd keep your eyes on it because the whole gold rally was like October. From October 7th, go see where the price of gold really was, and that did factor into some of it. But I forgot today. I was looking, and the news headlines would come in, oil would finally start to react, and then the Chad brought up gold, and I was like, wait a minute, I forgot to tie in the two every now and then. I've been looking at so many other factors. So keep in mind, if we do get some of these headlines this week related to war, I would watch gold, and it's staying at that stubborn 2340 price. If you know, you know, baby. So watch out for that. That is play number 2. And then finally, play number 3, man, Disney. So shout out to the long term. They got earnings tomorrow morning. I don't have any plays on these now. I'm pretty sure we hit these. I think we got just under 1,000% on the last Disney earnings, and that was a good one. But for now, no play, and depending on how they report, if it is a beat and it is optimistic after the whole Nelson thing, that would be a very good report. If they could surprise, they can move more than 10% tomorrow. If it's all in line status quo, it's probably going to clap everybody, and then if it's trading below 7% tomorrow, I'm imagining all those other continuation plays will be cheaper. So I will keep my eye out for this tomorrow, and like I'm saying, big beat, I would go for the continuation. If it's status quo, they beat by like a little bit, and maybe even if the stock moves a lot, it could just be one of those that gets faded. If we do get a big beat, subscribers, Disney Plus, profitability, saving money, I think this thing can wake up, especially considering it's still trading off of those highs from the Nelson Peltz thing. So watch out for that. There's no plays on that. That is play 3, and now for the plays that I made today, I actually had a couple. So I started off by closing my oil plays for a $100 loss. I was up like $150, $200 in the morning, and then cash open came, and then they traded a little lower. Then all of these headlines started hitting, and it was literally the 4th headline where it finally moved oil, and I was like, okay, I've been watching these headlines all day. I don't want to get dragged in the middle. I was down like 50, and then it quickly moved it down 100 by the time I closed. I said, hey, whatever, close out. Don't want to deal with that. Maybe maybe I could get a better price, but I just didn't want to deal with all of these headlines back and forth, not moving it, then moving it, then going back to not moving it. But oil, even below 80, I mean, I think you're going to get a lot of speculation, so keep your eyes out for that. Then the other play I made, I grabbed RTX May 98 puts. I grabbed 2 of them for 19 cents. I say May 98, I meant May 17th, 98 puts, but I grabbed this because they're up from earnings. They're staying pinned, and if we do get any sort of ceasefire or positive agreement, I think they may go down a little bit. And I saw that these were cheap, couple dollars out the money, thought I'd take it. It is a YOLO. Thought I'd take it. It is very risky. I try to keep it cheaper, but I did grab 2 in the event that I could make one of them free. So that was my second play of the day. And then the only earnings play I played today was MCHP. It was a chip play with earnings after the bell. All the other 2 standard deviations did not look good. This was around 2 standard deviations, and I was looking at it. This stock is near all-time highs. It's a chip maker. I think I played it last time, and my logic was, if they get any AI hype, it'll go crazy. I made a 10-cent play, and we see if we get lucky, but I think the stock went down after hours. They did not report good, but that was my third play of the day. And then finally, Boeing. If you guys were there live, I'm sure you got that news very timely. We got an exclusive drop super early. I snaked the chain on the Boeings. I grabbed 10 of the 157.5 puts for about 10 cents a pop. They were supposed to be 5, but I got scammed, and then a couple minutes later, they popped up because we got the news so early, and I sold 5 of them out for 25 cents, got my $100 back plus $25, and now I am holding 5 157.5 puts for this week for free. So do I think those will hit? Probably not, but I am expecting some back and forth headlines off the Boeing news today. Something about employees not doing inspections and falsifying reports. That's what got it moving. So just be on the lookout for the gap up, gap down news. So other than that, I didn't make any other plays. I am holding some others, and you guys had questions. So if you go on last week's, I believe, Monday video, I gave a big breakdown of everything that we're holding. You guys let me know if you have any. Some people were asking, so I thought I'd give you some plays that I'm holding now that are relevant to this week. I'm in my ARM shares. I got murdered on these, and honestly, after today, I'm not down that much, but this is a play that I'm in, 100 shares at 113.41. I still have my 1,000 shares of Intel at 38.14, have not averaged down. Remember, I was saying around ARM and some of these other earnings, AMD did not give that opportunity. I'm glad I didn't go for the average yet, but now ARM and NVIDIA coming up, we may either get sympathies, average, or if I don't, they'll start to come up depending on how those plays report. So I think these 2 plays are very relevant to this week. And then my Airbnb pre-run-up plays, I grabbed the 172 on Friday. That went up a little bit. Then the ones that I went early on, these things are going from break even to down 50. I'm still holding them. They're down 40 now. The 205's at 25, and I plan on selling all of these before the report. So think these plays are relevant. Let me know if you have any other questions, and I will give you an update. But now it's actually going to lead into it. The questions of the day. So the dark side of trading, bro, we're not there yet. I know, but that's why I'm hoping somebody tagged it by now, because it's pretty cool. It's pretty cool. But let's start with some other questions that the chat had today. They said, Josh, did you end up selling Gill? So I could have added this to a play relevant to this week, but is it tied to the chip news or pre-earnings? Not really. So this play, Gill, I grabbed this for one of those buyout plays where I could just buy it, hold it. You know, I like putting money in fixed income and sitting, and I have had good luck with some of these buyout plays. If they have any takeover, you get it, we sit. Sometimes it's volatile. You could even flip it a couple of times. Well, in this case, we were up a little bit on Gill. Then it came down. It is trading lower, and I am still holding it. I have 500 shares at 36.52, and what happened was they had takeover interest around the time that we got it. The company said they're going to form this special committee to review these buyout offers that they got. Apparently, it was like an unnamed person who wanted to buy it. Then they said they're going to tell us about it, but we haven't heard about it yet. They had their earnings. They came down a little bit lower, but they did say that about May 28th, that's going to be their annual shareholder meeting. They're going to give updates on that. So that's why I played it, and that's some of the story. But like, to understand it a little bit more, and this is why it is trading a little lower, there's a lot of question marks. One, it's been about like a month or so since they've given any updates on that, but also there's a lot of activists and large shareholders in this company, and they're fighting over who they want to run this company. I believe one of them is like the former Fruit of the Loom guy. He did good, then he left, and now there's a new guy. They don't like the new guy. They want the old guy, but then half of the people support the old guy. The other half support the new guy, and that's where all these sell plans and offers are getting bundled up. So all in all, it's kind of a weird situation, but I do plan on riding this out either until we hear of a new offer, or if we hear of that other one declined and they like kind of come out as one and say this is the plan. But it's just been a weird month or so with this, but for the most part, general idea still remains. I'm holding it. It's moved around a little bit, but I still am pretty confident until one of these final updates comes in. So great question. I hope that helps you out. Question number 2 now. Probably a very good one. You guys should love this one. Question: should investors prepare for earnings for the weekend before? That way people have their bets in place and could capitalize on the pre-earnings run-up. So here's the deal. Earnings offers different entry points at different times, but they all offer the same risk. And that risk is the stock can do nothing ahead of earnings and the premiums can run up or drop, or the stock can move a ton and the premiums do nothing. And also the stock could just move gigantic ahead of earnings and be totally far away from where you were, and that could either help or hurt you. But the point is, right when earnings comes out, everything changes. Right before earnings, there's a lot of hype and people like to speculate. So the fact of the matter is, a lot of earnings moves are based on expectations, and both before earnings and afterwards, they are fluctuating alongside of the stock. So as much as I would love to give you a clear-cut answer, I do believe the real answer is that it all depends. Sometimes the weekend before is the best, and sometimes it will hurt you. And why I say that, I just recently did this. So I played the weekend before Amazon, Apple. If you guys remember those, go back on the watch list. You'll see the logic and what we did. I made 100%, a little bit more on these Apple and Amazon earnings plays. It was the weekend before. We saw the other earnings. I started getting ready. I got in pre-run up, and then the market opened up next week. Nothing bad happened. That's why those plays held up, and we were able to do good. And no matter what happened on earnings, I still did better on the pre-earnings than actually playing the earnings. But then the next week I went with Square. I went with Airbnb. Airbnb plays are down. The Squares went down 50-60% of the earnings, even though they were up for like 2 days and there was like one period, and then after that, the week of earnings, they started to plummet. So it all depends, and this is the risk, and this is what makes people say, I want to play earnings and I'll never touch them, because all of these before, after, during, it can move a lot and prices can change. So hopefully you get your risk management in there, and that's why I say just decide, are you going to play before, after, or do you want to go for the event? And thankfully, we kind of have strategies for all of them. So make sure you check out that Ghetto Standard Deviation video, baby. I'm telling you, go listen to it again, and you'll see, man, that pricing will guide you. But that is question 2. I really appreciated that one. And now, let's go, baby. The dark side of trading. It's a very short answer here, but I'm going to show you guys something really cool. And I brought this up, and I don't know, I brought this up a while ago, but it just goes overlooked, man. And the question that inspired this is what the chat said. They said, dark side of trading, algos and insider trading. How efficient are they? So it's a very good question, but sadly, the reality is most insider traders don't make anything. I'm telling you, it's disgusting. Like retail insider traders, go look under the SEC enforcements. They're not making anything. They're getting inside info on buyouts. There was just a recent story about minor league baseball players. It's insane. One of them, I think, was even in the MLB. They had inside info on the Jack in the Box deal, and they knew about the buyout, and they only made $20,000, $40,000. Literally, we have made more off of $500 in a TLT. Granted, we've only done that twice in 4 years, which is still amazing, but it's like, come on, with no inside info or anything. But like, if you ever go through the SEC enforcement page, it's kind of humorous, because a lot of these stories where people get inside info on a retail scale, they don't really monetize it as well as you think, and it's kind of harder than what you would expect. But here's the kicker now. If it is insider trading and they actually make a lot of money and they're already kind of super rich, that's where the real insider trading happens. And they usually just get a slap on the wrist. Why do I say that? Why would you say that, Josh? I have Joel Lewis here. That is the UK billionaire who just got in trouble not too long ago. He wears an eye patch. He's in his 80s now. They did fine him like related to this, but not related for $50 million. But I think they did it in a way where technically his judgment was only $5 million, and that's after years of insider trading. And for him, he just gave all of his info to his private pilots. He had like girlfriends that were like, what do they, hoes, man. He gave insider tips to hoes. Okay, I'm sorry, but that's what he did. And all these people just made millions off of his tips. And again, he got a slap on the wrist. They said you could take your private jet in and out of America. We'll just hold on to your yacht until you pay everything, and that's it. So that's the first part of it, and I hope that could answer your question. But now this is the real secret that I wanted to show you guys, and the real secret that you're looking for, it is out in the open. And I think a lot of people overlook this. And what I'm telling you is, if you're really interested in the way the market works and you want real info and the things facilitating you and what you're literally buying, if it's an option, you might want to take a look at the 10Q for the CBOE and actually read it. And I am sure you will be surprised to learn things. And this is one of them. You're asking me about trading algorithms and how good are they? They are good if it is on Wall Street. The ones you see on the internet is all a scam. Why? Because once it's actually good, Wall Street will pay you hundreds of millions and license it and give you royalties off of it. I'm telling you, there's no world where it makes sense to sell it individually when you see what Wall Street is paying for some of these successful algorithms. But now, go read that 10Q, and this is what I just want to tell you, because I'm not going to go over all of it. I'm going to show you one more thing after this, but why you should read that 10Q. Did you know that you can lease a CTA? Have you heard of a CTA strategy or advisors or algos? They've actually been brought up a lot recently. Well, go read that 10Q and you'll learn all about leasing these. And that's part of it. And the other part, and like I'm saying, man, like the dark secret of trading is like, it's right in front of you. And why do I say that? Because it's a publicly traded company. You know, go their CME, their CBOE. And if you go through, I'm only showing you one part. Again, 10Qs are pretty deep, but I've showed this in the past before. And you could go see how much money they're making off of every options strategy, how much they make off of the crypto, how much they're making off crypto contracts, the stakes they have in other funds that you hear are buying this and that. I'm telling you, the 10Qs are pretty intense, and it's all right there, and it's just telling you how much contracts are going up, the number of trading days in a quarter that we're dealing with, where is it total options revenue per contract, the increase. This is why when I'm telling you, I'm like, wow, you're getting a higher floor on options. I mean, this isn't conspiracy. This is filings. And you could go through all of this stuff, but the whole world of algos and all of it, and how much people are making on the order flow, the licensing, Section 4393, one of those. You could go through all of it and find that, and that's what these companies are engaged in, and it's all public. So that's kind of the best part of it. But the dark side of trading is that you got to go through. Tell me what you find, and maybe I'll make a follow-up once we're done with this, and then we'll have a little bit more fun. So, Chad, I hope you guys enjoyed all these. Is that my Datadog picture? Yeah. I hope you guys enjoyed all of these, though. That is all I have for you. I will see you tomorrow morning. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, Daniel ain't pray for the lions to go away. David ain't pray for the giant to go away, baby. These problems will confirm a lot. You say a lot of things. You say who you are. Crisis will confirm who you are and what you really believe, baby. So let's go. Use the opportunity. I love you. Drink that water. Stay hydrated, healthy, all that good stuff. See you in the AM and... no.